MotiLal Oswal as an asset management company. Let's first start with small caps, right? What are small caps? I think all of y'all have spent a lot of quality time in the marketplace. So ABC of small cap is need. I don't intend to talk about ABC of small cap, but six important points with respect to small cap investing, right? Point number one, we all know high growth, high potential. However, what tends to happen, the reason for high growth, high potential is lot of times companies and sectors in the small cap indices are at a very nascent stage of their evolution. Example, IT in 97 to 2000. 100 rupees spent in the world, 2 or 3 rupees used to come to India. Over the last 23, 24, 25 years, now India's share in IT out of 100 is 26 rupees, meaning 100 rupees of contracts doled out in the world, 26 rupees come to Indian IT companies, right? IT back in 97, 2000 was small cap, micro cap, even mid cap in certain sense. So that makes small caps very high on growth potential. Small caps, the definition of small cap, right? For those of you who spent 2 decades in the market, right? It'll surprise you to know that the largest small cap back in 2004 was market cap of just 450 crores. Today, the largest small cap is 17,000 crores. So the definition and size of small cap has also evolved as the markets have, improved. In markets are more broad based, differentiated businesses are getting listed. So the size of small cap companies is no more small. This space is extremely under researched. To do justice to this point, I will use a slide subsequently to tell you the extent of under coverage, unresearched this space is. The universe is very large. The same slide will help us understand. This space is under-owned. I'll use a slide to talk about it. And there are unique sectors effectively in small caps. So point is, when you look at small caps, you have to think about emerging trends. You have to think about what will become big 5 years, 7 years, 10 years later. You have to think about these aspects, and then you will be more comfortable investing in the small cap space. Yeah, I will just I'll come back to these slides, but let me talk about the 4 points I made. December, we I spoke about this. December '04, largest small cap was just 459 crores. Tiny. It is today's tiny cap. It is basically possibly companies which don't trade actively every day. And the size now of the largest small cap is 17,385 crores. What is even more noteworthy is between the range of 2000 crore market cap to 17,400 crore market cap, there are close to 523 companies. That's a huge universe to invest. Large cap may 100 companies are present for the fund manager to pick. Mid caps, there are 150 companies to pick. Small cap universe is 523. It actually is more than 900. But if you restrict yourself to 2000 crores, the size of opportunity, surely the variety is magnanimous. Second point was under research, right? This space is not tracked very actively. Very few people cover small cap companies. On an average, your large and mid cap companies are covered by 26 analysts. If you consider companies like Infosys, TCS, maybe HDFC, in excess of 70, 80 analysts in the country would be covering these stocks. Maybe there are 15, 20 analysts sitting outside of India also looking at these stocks. But look at the picture to your left hand side. 415 companies have no analyst coverage, zero institutional analyst covering it. 319 companies, less than five analysts covering it. Just three companies are covered by more than 30 analysts. That is how under researched this space is. Under researched, what's the outcome? I mean, what is the takeaway from this? The takeaway from this is AMC is running dedicated small cap funds, leverage on this, because analysts spend a lot of time. Folks like the Motilal Oswal group does a lot of work in this space by way of private equity practice, investment banking practice, and thus has the ability to cover a lot more ground as compared to most others in the outside world. Yeah, small cap investing they say is risky, and risk plays out in various fashions, right? One is the risk of volatility. Second is the risk of actually not making money for a long period of time. But the reward can be outsized if you stay put for a long period of time. Yeah, observe the data. What we've simply done is broken up BSE small cap index to 250. There are 250 companies here into five equal parts: the best 50 and the worst 50, and then everything in between. So had you done this exercise, this is based on today's data. If you rewind close to 20 years back, 100 rupees invested in the worst 50 companies would have caused a loss of 76% absolute. Matlab 20 years later also you've lost tremendous amount of money. But look at the outcome of being in the top 100 companies out of 255. 17 times wealth creation, or 19 times wealth creation. That's huge. Imagine the outcome. But also you got to note that this the delivery of the 17 and 19% is not structural. It's not straight line. It has gone through its set of volatility. It has gone through its phase of sideways movement, and it has gone through its phase of remarkable drawdowns. But what you've also experienced is remarkable upticks. Post COVID, significant uptake, and several other times. And I'll use a previous slide to explain the uptick cycle in small caps. So largely speaking, under researched, ability to make tremendous amount of money if you stay invested, but highly volatile. Now, what causes volatility in small caps, or what causes volatility in equity investing itself? Now, this chart is quite revealing. Let's start with Nifty 50 EPS, right? There have been three super cycles in the Indian markets over the last, let's say, 20 years. We'll restrict our discussion to last 20 years. First super cycle was 2003 to 2008. Nifty earnings grew by 25% compounded annualized. That is huge. And your indices, practically grew four times, five times in this space. That was followed by a GFC crisis, and post that there were several disruptions. There was a banking sector cleanup. There were whole host of reforms like GST, RERA, demonetization, etc., etc., which effectively meant that each time the companies came out of a previous low profit growth cycle, they hit another one, and hence the period of '08 to 21 was marred with very slow profit growth. Post pandemic, as you know, things opened up, base effect kicked in, but business prospered. Business effectively thrived. So large cap companies grew at about 23% compounded annualized. The earnings grew. Now, what was the small story in small caps? Small caps, for lack of data, we've of course not covered the first 3 years, but the 2 years pre 2008, the earnings growth of small cap was a massive 33%. You know, b- Largely speaking, a 700 basis point premium over large caps. But post that, as large cap companies were hit, the earnings of small cap companies have been very volatile. FY11, the earning at an index level was 191, which dropped to 38 in FY20 in FY13. Then it rose again, then it dropped again, and the earnings have been very, very choppy and volatile. Thus, the journey and ride in small cap investing has been very, very choppy, and there have been lots of ups and lots of downs. Because ultimately, as Ramdev ji, has told all of us, right? Stock prices are slaves of earnings. If your earnings are volatile, stock prices will be volatile. If your earnings are secular, your stock prices, in some sense, will be secular up to a period of time, right? But that picture changed substantially post COVID. So 21 to 23, these 2 years, earnings of small cap companies grew by 49% compounded annualized. 22 versus 48. This is almost 2x, bigger than 2x. and no prizes for guessing. Now, if you look backwards and you connect the dots, the small cap rally really came in on the back of this data, on the back of this, stellar data, and that's why your small caps have done so well as compared to large caps. Yeah, picture very simple. Now, look at the earnings growth expectation from large cap. A 212 number will turn 1100, about 15-16% profit growth annualized in large cap next 2 years out. Small caps, on an absolute basis, the earning expectation is roughly about 80% on an absolute. Compounded annualized karo, so it is about 38%. Same is the case with mid caps as well. So if outside your large caps, if the space is growing much faster, wouldn't money chase that space? Wouldn't you want your customers to participate in a space where earnings are growing much faster than large cap? If the answer is yes, small and mid cap funds are funds for you to consider. Sticking to the conversation on small caps, right? Over last uh, over last 20 years again, there have been four super cycles of small caps, right? Over a large, I would say that over a large 20-year equity market cycles, there have been four mini cycles of small caps. I think that's a better way of looking at it. The first cycle was June of 2006 to Jan of 2008. And look at the remarkable outcome. Your large cap indices did 141%. Your small cap indices did about 197% return. 50 basis points, 50 percentage points of outperformance. What is noteworthy is to know that the rally lasted for 579 days. Second super cycle rally lasted for 740 days. Again, 50% outperformance over large cap. Third such super cycle was March 16 to January 2018. The super cycle, the mini cycle lasted for 661 days. Fourth such cycle was after COVID. From the bottom of COVID, which is March 20, 23rd March 20 to Jan of 22. Now, remember this, right? Jan of 22. We will use this in subsequent slides to drive a point. But there again, the outcome here was even better. 143% outcome of large by way of large cap investing, 247% return by small cap investing. Of course, the space is risky. Of course, we all knew that on 23rd March, we weren't, no one was thinking about investing. But the data is so supportive that small cap cycles, the mini cycles of small cap last for on an average 660 days. And the outperformance of small cap over large cap can be very significant. Now, this is not a fun fact for, this is not an important fact for a portfolio manager, but this is very hard data for asset allocators like you. You are, all of us have a fiduciary capacity to our clients, right? मतलब हम clients का भला चाहते हैं, हित चाहते हैं. At the same time, we want to moderate client expectations. Small cap category, small cap funds are your way of creating alpha for a client's asset allocated portfolio. Think about it. ध्यान से आप लोग सुनना. When you asset allocate a portfolio, there'll be some debt, there will be some equity. Within equity, you will do a lot of large caps, you may do some mid caps. But if you don't add small caps to a client's portfolio, provided the risk taking ability of the customer permits, you are not able to add the advisor alpha, the intermediary alpha, or whatever alpha you may want to call. And the data is right in front of you to kind of note, right? So mini cycles of small caps over last 20 years have lasted for almost 2 years, and obscene amount of money has been made. This time around kya hua hai? From March to now, even if you add, the data is as on 31st of October, but even if you fast forward it to today, add another 45 odd days, we've seen a cycle of about 260 to 70 days of small caps beating the large cap. If you are a believer in past data, if you think that some of the traits play out, same things may not play out, but traits play out, there is a lot more to play in the small cap space. So this does, if you were to rely on this slide, the slide tells you that these aren't times for you to be afraid of small caps. Moving on, the other popular belief is, I can, as a MFD, as an IFA, as a relationship manager, I will allocate money into FlexiCap. The FlexiCap manager will choose my asset allocation as well. And look, what that has done. FlexiCap managers, I mean, if you strip off arbitrage, if you strip off small caps from the equity book of the industry, 64% money is invested in large caps. 25% money is invested in mid caps. And a mere, princely sum of 11% is invested in small caps. Look, dekho aap, this is hard data. If you thought that flexi cap manager, and this also by the way includes multi cap category, which is mandated to allocate 25% into small caps, right? So मतलब सब कुछ मिलाकर है, don't like get confused that multi cap funds aren't doing 25% small cap, but the 11% allocation also is coming on the back of compulsory 25 allocation of multi cap funds into small cap. So if you like the India story, if you think that small caps will have sectors which are emerging, which are of tomorrow, clearly you need to buy dedicated funds allocating money to small caps. So close to 80% of the money is invested into small caps by way of dedicated funds. The size of small cap category is no small anymore. This is the fifth largest category in the 17 mutual fund categories, 17 to 18, broadly speaking. The AUM under small cap funds all put together is roughly 2 lakh crores now. But what you must know is not everything is doing well on a 1 year, 3 year basis. There are large funds with 20,000 crore plus asset base on a 1 year basis, trailing the index by 20 percentage point. Index has done 34%. Some of these funds have done 14, 15%. Some funds are in the 20 on the 20% mark. Some funds are just about struggling to get to 30. And more than 50% of industry AUM is actually below the index number on a 1 year, 3 year basis. So opportunity is huge. Opportunity to go back to some of these customers who possibly other advisors may have advised on, and get their money into a fresh idea like Motilal Oswal. I told you that small caps have a fairly unique set of sectors. If you see your financial services, IT, oil and gas, they are full of companies which are large cap, and not many companies are small cap, but hair small cap. But if you go to your right, chemicals, very small representation in large cap. Uh, Capital goods, no company in large cap. Consumer services, no company in large cap. Media, reality, textile, pick any sector, you will find that a lot of these emerging or sectors which are like which have gone through the reform process are available only via the small cap index. And these are pockets of alpha and Pratik Agarwal says this in on all his videos, right? Monthly videos, you will see it's time for alpha, and these are the places where alpha can effectively come in from. Now, moving on to the next topic, why small cap? Why invest today? Why small cap today? Small caps have run up so much. Should I be investing today, right? That's the topmost question we are getting in every interaction we've done. Point number one, earnings of a small cap index has been very volatile. If we were to calculate standard deviation, 23% ka standard deviation tha in earnings, but that has reduced substantially, right? And you see, earnings are more secular in nature as we speak. 48% CAGR growth, 21 to 23, and expected CAGR growth will continue in this range going forward. So, A, profitability is back, consistency is back as far as earnings is concerned. Point number two, the health of these companies have improved substantially. If you remember in the last decade, companies used to run very high debt to equity ratio. Small caps, for a very extended period of time, were more than zero point 0.6, zero point 0.7, debt to equity ratio. Post COVID, that was corrected substantially. Books were restructured, businesses were restructured, and the element of debt in various businesses has come off. And the ratio currently stands at about zero point 0.3. It is very small. Debt to equity ratio, health of the balance sheet has improved quite a bit. Companies who need expansion capital are effectively raising money by way of FPO or IPO. Yeah, so you are not necessarily going to the banks. You are basically diluting your equity to raise more money, thereby making more free float available for professional investors to participate. Yeah, small caps is one of the categories which is loved by investors this year. Right, 21, just 3,000 crores came in. 22, 23,000 crores came in. 23, as we speak, 31,000 crores have come in. A lot of this money is structured. This is not necessarily ad hoc. March 22, the SIP flow in small cap category was 1100 crore monthly, 1150 crores. As we speak, October ka data, November data is yet to be published, but October data, the SIP book has doubled. 22 100 crores is now the new inflow in small cap category. And as structure emerges, as more money through SIP emerges, there is more buying in this space. Yeah, I told you to remember the June 22 number, which was, sub cycle 4 of small cap rally. This was June 22. This is this is again profound. This will tell you why small caps is not a bad place to be, as long as the risk, levels of an investor permits. Jan 22 at the peak of cycle number 4, the PE of small caps was 32 times. Index had run up to 47% from the bottom, and the PE had expanded to 32 times. Now, what's the story post that? The story post that is very, very simple. After the peak of 22, the index continued to run, but the PE collapsed. PE from 32 is down 25%, and presently, trading at about 24 to 26 range. So what does it tell you? Are valuations in small cap expensive? The answer is PE is lower than the 32 number which we saw at the peak of the last rally. Yeah, why did this happen? Because the pace of earnings growth is much faster. आप देखो ना, P by E, P बढ़ा आपका 21% से, E बढ़ा आपका 48% से. So obviously PE of the market is bound to come down. The other indicator which we popularly track, and the market also tracks it, is small cap to large cap ratio. Now this ratio hit a peak of zero point 0.9 in October of 17. Post that, large caps did well, small caps for various known reasons effectively corrected, and it came down to about 0.41 during COVID, and the ratio is just about 0.66 at this stage. So from the top, it is much lower. So your valuation, what is your valuation metric effectively indicating? That we are not, this is not time to exit small cap. That's the indication. Second, it is also telling you that if you are getting new money, it is okay to get new money into the small cap space, because things are not crazy yet. Election, I'll skip. Now there is a fear that something can go wrong globally, and there will be a problem in the small cap space. But look at the data. Export as a percentage of sales of large cap companies is 23%. But for small cap companies, it is a mere 12% number. It is half of large caps. So which companies get impacted the most fundamentally? It should be the large caps. Small caps, because of reaction, of course, may get impacted more. But the data again does not support the argument. I'll kind of skip this. So small cap from a valuation perspective are not bad. These are definitely not times to exit small cap. These are definitely times to structurally continue to invest in small caps. Now the question is, why Motilal? You are not the first fund. You are not teaching us what small cap investing is. But there are merits for a Motilal Oswal to come up with a NFO in small cap, and we think we have a space because of our positioning. Point number one, expertise. I don't need to tell you our expertise. Second, our focus is on high quality, high growth. In this space, getting quality companies is difficult, but we have the capability of identifying quality companies with very high growth potential. Yeah. We are of the belief that your victory is our victory, and hence our allocation in this space is also very, very large. And I will run you through a slide which will tell you so. Size is an advantage today. Think about it. We are creating our portfolio today. Today, as in when once the NFO is over, of course, we will kind of create it. But we are creating the portfolio today. There is no legacy, no baggage, no issue of exiting an existing stock to buy something else. None of these issues are present with us. And I will tell you the secret, behind this in subsequent slide. And we are participating even today as a house in some of the best growth themes in the country. I'll skip, these slides. There is a lot of English. You can just, consume it, briefly read it over a period of time. But, this is how the house is stacked even today. We have Motilal Oswal as a asset management company. Even today has exposure in the small cap category to the extent of 9,000 crores. Matlab, if we were to carve a fund, if we were to create a fund and investing only in small caps, meaning all our assets are segregated, 9,000 crores worth of money is invested in the small cap category, 22% of our AUM. So small cap investing is not new for Motilal Oswal. In fact, if you see some of the multi-baggers which we've picked over a period of time, right? Look at 2020. Of course, you may say that it was a year where everything was depressed. Hindsight mein sab acha lagta hai. You're right. But there were three winners which were like 11 bagger, 8 bagger, in the form of APL, Apollo, Mastec, Persistent Systems. There in 21, we identified two stocks which were like 7 baggers, CG Power as well as Safari. And these are some of the yeah these are some of the recent most picks in 22 and 23. Point again I'm making is small cap investing is not new for Motilal Oswal, and we've demonstrated our capability of picking small caps and riding along with it. Yeah, riding along with it is important. Now, can an individual investor replicate the strategy? The answer is yes. But think about it. When an individual investor, sees doubling of stock price in his portfolio, the tendency to sell is a lot more. But a portfolio manager is not looking at the price alone, looking at several other factors to decide whether to continue to hold or exit. Right? Because they are able to decide based on several other factors, they are able to, they are able to get much bigger wins. That's the limited point I'm making using this slide. And small cap investing in itself is very tough. It's easy to lose money. There are a lot of companies where you lose money. Very few companies in which you make money, and to identify that is like a skill in itself. These are some of the high potential areas, high growth themes which are seen across the house. Most of our funds have allocations at least 65% in some of these house themes, and there is a good possibility that our small cap fund would also invest in these house themes, right? These themes are narrowly selected. Look at the narrowness of these themes. We aren't saying pharma because pharma it has like several parts to it. There are companies which launch drugs in US like an IPO, like an NFO, sell it for a period, and then of course close business and move on to something else. There are domestic based pharma companies, right? But we like the portfolio management team along with Pratik Agarwal, Naveen Agarwal, and Ramdev Agarwal got together and identified these narrow themes: hospitals, diagnostic, right? Pharma retailing, very, very narrow, very, very niche, very few participants in the space. But would you say that this space will become big over a period of time? The answer is there is a good possibility. Within financialization, we are playing with, we would like to participate in retail focused lenders. It could be banks, it could be NBFCs, but where there is high AUM growth, because we are a house focused on growth. There are capital market plays, life insurance plays, of course, which is a space we continue to like. In new age business, in new age tech services, rather tech and tech services, we like mid cap IT, we like new age businesses. China plus one, I think no prizes. आप लोग ने बहुत सुन लिया होगा. I'm like skipping the details, but we'll be happy to answer in Q&A. Make in India again, a lot is discussed, lot is spoken, but defense is where there is material change. Renewable power, of course, there is material change. Infra, alliances, of course, we all know that infra is not cement and bridges only. There are several components which go in building infra. Capital goods engineering, like we saw in one of the previous slides, these are largely present by way of small cap. Auto and EV is another space, which we like. Within urbanization, leisure and luxury is our focus area. You are unlikely to see an empty Starbucks, but there is a chance that you may see a empty coffee day, for example, right? And anything which is premium is aspirational, and everybody wants to go there. And everybody wants to do that premium activity. Hence, your margins are much bigger. So, travel, hospitality, brands, leisure, and luxury are places which we like as a house, and you will see some representation of these themes in our small cap fund as well. Quickly moving on, I'm skipping all the details. The portfolio manager for the fund, the primary manager will be Ajay Khandelwal. Ajay has 18 years of experience. He's in the past two assignments, he's worked with two fund houses, the last one being Can Robeco. He took over the fund when it was a sub 2,000 crore fund. And before he exited, before he announced his exit, the size of the fund was 7,000 crore plus. Like, it's a stellar achievement, and Ajay has been able to ride the wave for Canrobeco. Niket, who's an existing manager, will be the co-fund manager, and there are of course industry veterans who comprise of the investment committee, and they will of course keep reviewing the progress of the fund and do all the activities which take care of fund's progress.
Shreyash, Anirudh
Yes,
here.
yeah, Nirmal.
Niket is involved with the mid-cap strategy right now as well, right?
Yes, he's the main manager for mid cap and flexi cap strategy.
The reason I asked and wanted to highlight is, for our partners to know that Niket and the mid-cap strategy from Motilal has done really, really well. It's one of the top performers in the category, and the same expertise is now getting utilized for the small cap category as well.
Yeah, perfect. That's a good point, in fact. Moving on, fund details. The NFO has already started. We have very large, commitments from several partners. All of them are encouraged and enthused by the slides that we are showing them, because there is this, usual thing that small cap बहुत चल गया अभी क्यों करें, right? That's a common objection. The fund structure is also very, very nice, investor and distributor friendly. 1% exit load. If the investor exits in 15 days, post that, there is nothing out there, right? Within the NFO period, you got to ensure that your applications, digital, physical, come in before the 19th, and funding also takes place before the 19th. Else, you will not be able to participate in the NFO, and you can, of course, come in once the fund typically opens. But during an NFO, right, we are painting the town blue. If you pick up ET almost every alternate day, you will see a Motilal Oswal asset management company ad talking about high conviction, high growth, also talking about small cap fund NFO. So all your clients who read ET have good exposure. They have seen these ads. All your clients who track money control will see a Motilal Oswal small cap fund ad. All your clients who track, for example, ET will see Motilal Oswal small cap fund ad. So we are making all the effort to inform investors that small cap is a great place to be, and with your effort and your conviction, the allocations will effectively come in. Yeah, on that note, I'll pause, and I'm happy to take questions. These are, of course, product labeling, just to indicate that the fund is, belongs to high risk, very high risk category, which we already know, and standard disclaimers, which all the market participants effectively use. Yeah. So
So,
Anuj and Shreyas, you both are on mute. Anuj and Shreyas, you both are mute.
okay. Where did I lose you all, Anirudh?
No, no, in the last 5 seconds
no, that
only.
Okay.
I was saying something. Yes, yes. So, Shreyas, that was very good presentation, and I think you have explained it very beautifully. So, I request my our partners to please unmute yourself and ask questions, if any. So, I request everyone to please ask questions. We have Mr. Shreyas from Motilal.
Anuj, I think there's some questions on the chat window as well. Just check them.
Sure. So, Mr. Hari has a question. Hi, time frame for constructing portfolio. So, provide some brief on this part, and also if any cash holding post launch. So, what the percentage is?
Yeah, yeah. So, so SEBI allows us 3 months to effectively construct the portfolio. Our mandate, from all the investors is to basically run a small cap strategy. We will run a small cap strategy. Intention is not to run cash positions in the portfolio, right? So, whatever time it takes, 1 month, 15 days, 2 months to construct the portfolio, only during that time you will see some cash, but intention is to run it like a fully invested fund at all points in time.
So, one question is how many funds will be there in the portfolio, or how many shares? I think it should be right.
Yeah, yeah.
Stocks.
I think
Yes.
the question must be on stock. Yeah, good
Yes.
question. In fact, I'll give you some data here, right? Uh, Small cap category has AUM of 2 lakh crores, like I said. Funds with more than 5,000 crores have close to I think 85 stocks on an average. Funds with less than 5 crores have close to 70 stocks on an average. Yeah, because of our high conviction, high growth approach, we intend to create a portfolio with just 30-35 stocks, which will be a huge differentiator for all of you all to talk about, right? All our existing portfolios in the house, across AIF, PMS, mutual fund, even Nikkei's mid cap fund, for example, which is a 6,600 crore fund, has just about 34 stocks. So we intend to run a small cap fund, create a fund with just about 30 to 35 stocks to start with. If scale increases over a period of time, after crossing 2,000 crores, we may think of adding the 36 stock. But till then, we don't see a need to add, we don't see the need to go beyond 30-35 stocks at this stage.
Shreyas, what is the minimum and the maximum percentage in a particular share?
So, so basically, we are again governed by SEBI limits, right? Out there. So the intention is to run more equity portfolios. Intention is to run anywhere between 1 to 4% exposure across stocks to start with, right? But over a period of time, something which does very very well can go up to 8-9%, and post that we will have to start trimming positions.
Right. So, any other questions from City team also and our partners? Please ask questions if any.
So one question I had, you said it takes about anywhere between 1 to 3 months for you to do the construct of the portfolio, right? So during that time, when you are opening it up, post the NFO closure, so how do you price the units for people to pick it up as and how you go around? It will be at par, or how do the pricing work
Yeah,
of the
thank you for
units?
your question, Mr. Raja. The pricing works just like it works for every other fund. On one hand, you have the total market value of all your investments, be it whatever instruments you've invested in, divided by the number of units you've issued. So it won't be at par; it will be at the market price, whatever price of securities at that point in time. By the 1 to 3 month horizon, I meant SEBI gives us that flexibility, right? We don't want to run cash positions. We may deploy quickly.
Okay.
Thank you, Mr. Raja, for asking the question. Guys, please you can ask the questions, or you can also write it in the chat box. So we'll be happy to answer the questions.
think we have a question. Anuj, you want to?
Yes, yes. So, post-launch, whether lump sum is allowed, as few small cap funds are allowing only in SIP mode.
Yeah, yeah, sir. Don't worry. We are not shutting the fund. We are raising the fund today, and we are
Yes.
happy to accept lump sum during the NFO as well as post NFO. We think there is a lot of room in the space to make money, and we intend, if the size gets obscene, of course, at some stage we may take a call, but it's too early to say that we will stop taking lump sum.
So, Shreyas, I have one question on interest rates. I think you
Yeah.
have mentioned that the interest rates pose which currently is happening in the global economy, right? And India is
Yeah.
also seeing a pause in the interest rates, and the inflation is also going down. So, you said that is the biggest beneficiary in terms of small cap investing in small. That is a yeah. I think yesterday's call also I
Yeah.
so, and so what do you expect when the interest rates are, are going to cut, or when you can see a cut in the interest rates, like maybe from 6 months down the line, from 9 months from here? So, what's your take on that?
So, thanks for that question, Anuj. Now, this is really, massive guesswork that's happening in the marketplace, right? So
Hmm.
what are, so let's try and identify what is certain. What is certain is inflation has come off. Why did interest rates
Yes.
start rising? Because inflation was rising. Now know for sure that inflation is coming off. We now know for sure that while RBI is watchful, they've not hiked rates. We now know for sure that there is commodity prices, while they may spike at any point in time, they are unlikely to sustain much higher. So the risk of future inflation is also coming off. When these things are certain, and you know that inflation is now starting to trend in a band at which RBI will get comfortable, it's just a matter of time for RBI to cut rates. Now, it could happen 6 months later, it could happen 9 months later, it could happen 1 year later, but with fair, element of certainty, one can say that at some stage we will start seeing interest rate cuts.
Okay. Thank you.
Well,
Uh, Anirudh, sir, any questions? And so, any partner, if any questions?
I think there are no more questions, Anuj, I guess.
Okay. So, sir, any closing remarks if you want to give to partners?
Yeah,
Otherwise,
yeah.
then
So I think, guys, point number one, and Ramdev ji always says this, right? Warren Buffett used to say this for US: don't bet against US. I would say the same applies to India. Don't bet against India. Second, at times, okay, now I'm like going out of my comfort zone and saying this. At times, it sounds very fancy and smart to say that abhi khatam ho gaya sab, rally khatam ho gayi, etc., etc. But remember this, that in India, or equity investing in general in growth economies, right, your downs are temporary and your ups are permanent. We, all of us, are in the business of making money for our end clients. By sitting on cash, by sitting on sidelines, you will never make money. So stay asset allocated, think about clients asset allocation, think about at what valuations you are buying different funds. Right now, within the same category itself, you will find funds with 50 PE, and you will find funds with 25p. The choice is yours. Don't look at the historic return, just simply look at valuations to make your investment decisions for your end customers. And if you believe that India will be a $10 trillion economy, $20 trillion economy over a long period of time, your small caps, mid caps, large cap, all of them will do well. But small will grow faster because the sectors and space where they are present will grow much faster. But temper your allocation. Risk management tells you that anywhere between 5 to 20% in every asset class is reasonable. Now
yes.
pick your clients and pick your allocation, but don't participate. basically
Yes, sir.
participate in the growth story of India.
Right. So let me conclude the session as Mr. Shreyas told us that you can allocate 5 to 10% depending upon the asset allocation, depending upon the risk and return phenomena. So I request our partners to please consider this fund, consider this NFO. NFO is open, and you can allocate some part of the investment into the into the small cap sector. And he has also told us about the GDP, how the GDP is growing, interest rates, the pause of the interest rates, the biggest benefit, small cap sector is the biggest beneficiary. Inflation is also cooled down. And the EPS for the next 10 years, I think the EPS would be higher for small cap sector also. So chances of the higher returns are there. And the valuations, like they are again trading at 24, 25p. So valuation wise also, like for the next 2, 3 years, Horizon 4, 5 and 4, 5 years horizon, so your investments can be done in the small cap sector. So I request our partners to please consider this one. And at last, thank you, Mr. Shreyas, for this beautiful session. And thank you so much, guys. Thank you, Anirudh sir, for joining the session. And thank you, Center City team members also. Thank you, sir.
Thank you, Anuj. Thank you, Anirudh ji. Thank you, Aditya, for inviting me, and all the best with the future endeavor.
Thank you. Thank
Thank
you,
you.
Shreyas.